SENS. Pretty much a game-changing technology in terms of monitoring glucose levels, but there's a catch. It's the only FDA-approved long-term implantable sensor that provides real-time data. Yes, it's implanted under your skin. In a Fox Business exclusive, Senseonics CEO, the company that makes it, Tim Goodnow, is going to show us and tell us how it works. 10%, 8 to 10% of the population suffers from diabetes. This could be an unbelievable game changer. How does it work?
Well, Liz, thanks for having us. It's a very exciting technology, as you said. The thing to keep in mind about managing your disease with diabetes is the fact that it is long-term and chronic. So anytime you look for any improvement in that, you're trying to make people's lives easier. So that's what we approached with the implantable product. The value behind it is just as you said. You put it in under the skin and you forget about it. So that whole ability to make your life easier is what we're trying to enable with that sensor.
So a doctor implants it, and we're going to show all of this on camera here. Doctor implants it, and then you put a sensor over it. Is that correct?
Right, we call it the transmitter. The doctor
now, does it
implants a
hurt to be
sensor.
implanted? What's the size of it?
It's very small. Think of it as a couple of grains of risotto rice. So it goes just under the skin. We typically put it in the back of the arm, and then a transmitter goes over the top of it, and that's how we talk to the cell phone.
Okay, the cell phone, and I'm assuming that's an app. This isn't an Apple app. This is your app, correct?
It's our app, but you can get it at either through the Android, through the Google Play, or you can get it at the Apple Store as well.
So when the sensor and the subcutaneous device, SENS, sense that you need some insulin, it then sends a note to your phone?
Well, it'll send your glucose level to your phone.
The clip demonstrated how powerful the SENS product is and how it is used by those suffering from diabetes. Yesterday, Senseonics announced that it has entered into a securities purchase agreement with several healthcare-focused and other institutional investors to purchase 40 million shares of its common stock in a registered direct offering at a purchase price of $1.25 per share. The gross proceeds from the registered direct offering are expected to be $50 million. The company intends to use the net proceeds for general corporate purposes. The registered direct offering is expected to close on or about January 21st. I do believe this direct offering is a good sign that the company is growing, and I do see a lot of potential with Senseonics. This was announced December 23 and is just a business update on the company. Fourth quarter 2020 net revenue is expected to be approximately $3.5 million, increase from the prior expectation of approximately $2.5 million. Received communication from the FDA explaining the reallocation of agency resources to address emergency use authorization applications for products related to the COVID-19 public health emergency is affecting market application reviews, including the SENS 180-day product, which will be delayed by at least 60 days. Back in December, Senseonics was granted a U.S. patent. It was titled Remotely Power Sensing System with Multiple Sensing Devices. The stock closed at $1.66 on Friday. If we look at the 1 week charts, it was up 84%. 1 month it's up over 200%, and 3 months it's up 300%. If we look at the 1 year charts, it's only up 81%, but just lately it's gone up over 300% in the last 3 months. If we look at the analyst ratings, 50% says buy, 43% says hold, and 0% says sell. That is always a good sign. If we look at the earnings report, they are expected March 11 after hours, so keep that in mind. If you're thinking about buying some shares or options, we can go ahead and look at the options chain. So this one expires February 19. If you were to buy a $2 strike price at the money, it would cost $35. In the money would be $50. It's hard for me to buy out of the money because the delta is so low. If we take a look at the $4 strike price, even though it only costs $15, we see the delta is 0.24. So every time the stock price goes up by $1, this option will only go up $24. If we look at the $2 one, it goes up almost twice as much. And yes, you're paying double the price, but it's easier to make money with an at the money option versus out of the money option. If you were planning to buy out of the money option, you would consider buying more than one option to actually make money. There's another way I like, and that is selling cash secure puts. So for a cash secure put, you need to have the collateral. So if you were to sell a cash secure put with a strike price of $150, so you would need to have $150 in order to collect $35. It's more than a 10% return. And if you don't know what a cash secure put is, essentially is you can get the stock at a discount if the stock price, which is at 166, is at 150 or below at the expiration dates. If you're just looking to collect a premium, you would just go ahead and go out of the money. So out of the money, you can collect $10 and all you have to put up is $100. Let's see if it actually does work here. Let's just put one contract review order. So our collateral is only $100 to get $10. That's a 10% profit right there, just from selling a cash secure puts. And that's what I like about selling cash secure puts. Gents, always conduct your own due diligence before placing any trades. Before I let you go, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Let me know what you guys think. If you have any questions on options, I can go ahead and try my best to explain them. And please don't forget to like and subscribe if you haven't already. It would definitely help my channel out a lot. I just started this channel last week and hoping to get at least 1,000 subscribers by the end of this month. So help me out, guys. Thanks a lot.